And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon, friends and traders. Welcome to the Market Recap. I am Dan Hodgman. It is Tuesday, January 4th. Hope you guys all had a good day. Some opportunities in these markets here, and some are kind of quiet. You got crude oil grinding higher, kind of maintaining this directional trend that we saw in the overnight session. Kind of started in the tail end of yesterday. Found some good opportunity there. So if you're looking at trend trades, going with momentum, kind of like what we talked about on today's Coach's Playbook. If you haven't checked that out, make sure you check it out. But we talked about this idea of looking for momentum and how do you get into it and looking for opportunities within some of these markets. And one of my big things, and I love directional markets. I love trading momentum. I love trading trend. It's really looking for good opportunities. We talk about it a lot here on the recap. We look to see if the market's trending higher like crude oil did today. We look to see where are those breaks coming in. Where can we get those good, cheap buys on directional moves? So you got that in crude oil. You got S&Ps opened up near highs and then broke pretty strong here today. But ending the day pretty much unchanged. I think that market is technically down 0.07% right now. But had a big move. You got the Dow making record highs too. Well, NASDAQ's down over 1%, 1.3% down on the day that market opened up. Started the sell-off pre-open and really just kind of extended there, breaking pretty heavily. So tech sector getting concerned. We'll take a look at some stocks here in a little bit. You got gold. Well, you got yields kind of doing some stuff. You got some concern out there. When there is fear and concern, gold tends to see a little bit of a pop. So gold opened up this morning right around 6:30 at settlement price. It was trading, and then that market made a nice move. Didn't recover all of yesterday's losses, but a strong upside move until about 9 o'clock this morning, and then that one got pretty darn flat. Euro flat most today, closed the gap to settlement price, went and made a high, broke back down and kind of fell right into a little bit of a range. And the 10-year note, not a whole lot to say here. Took all day long, and we're about a tick off settlement price. So still not feeling great here, so I do apologize for my voice. And once again, took another COVID test. I am negative, so pretty confident in saying I don't have it. Just a standard cold going on over here. Let's go take a look at these markets and we'll jump into other things going on. But first, I want to say hello to everyone. Ricardo, Jorg, PK, Jim, Main Points. Good to see all of you guys. And yes, what a day in NASDAQ. Ain't that the truth? If you got the short off the open, there was some great opportunity. And I want to actually talk about NASDAQ here too when I pull it up. One of the big things that I'm looking for to see, when is momentum over, right? Momentum can be looked at in a lot of different ways. It can be breakouts, right? And you're just looking at a shorter time frame. You're trying to get that momentum. You're trying to go with continuation in that direction. How do we know when that's over? Well, volume for me is one of the most important things, looking for those volume divergences. And we saw that today in NASDAQ. Now it sets up like a normal looking day in the NASDAQ, strong volume off the open, right? Which is when we tend to see those big, drastic, fast moves. So we saw lighter volume off, or stronger volume off the open. And then as soon as that volume kind of dried out, we saw that market start to slow up on direction and then take back off in the other way. So let's go ahead and take a look at these charts, and we'll take a look at that one in just a second. As always, we're going to start with crude oil. So this is what I really wanted to show you guys. This is what I was talking about kind of towards the tail end of yesterday. You started seeing this market and into last night start to really get directional for us. Obviously, OPEC is talking right now, so we're going to continue to get a lot of information what's going to happen there. And that's going to have a strong effect on this price. But, well, just thinking, if prices continue to go higher, are they going to continue to cut supply and increase demand, which is going to send prices higher? Well, that's what this market's doing right now. Now, here's what I love looking for. I love trying to find consistent points of contact on a trend line. If a market is trending higher and moving in an upwards direction, I'm really not too concerned about the upside. I'm not concerned about the high side of my trend. Rather, I'm looking for weak points. Where do I get in on directional moves? Now, off the open, we pulled right back. Now, we've only got 2 points, and a lot of people say, hey, I need 3 points of contact for a trend to work for me. So maybe we're going to miss the initial move off the open, and this shoots big move up. That's where our high of the day was. So we went from all the way down here at 76.30, rallied that bad boy up to 77.64, and broke back down. Now here we go. We came right back in, 4th point of contact, right down to the low side of trend. This is where we're looking for an opportunity, right? This, to me, is a great opportunity. Instead of saying, hey, direction's over, no, we're just pulling back. Lower or higher lows, market's maintaining trend to the upside. And off to the upside. So this market pulled right back down. Main points, I see your question there. How do I use my volume profile? I set it up for regular trading hours. So obviously every market's different, but I set up for pit hours and keep it pretty simple. And here are just some of the values we've got. But the key one here is the value percent area. 70% of value is what I'm looking for in my volume profile. All right, next, let's go ahead and look at the S&P 500. Like I said, S&P 500 is pretty much resolving at the end of the day here. Flat settlement price at 47.86. 47.86 is our settlement price. So we're just a little below settles. What happens off the open? Well, last night, this market really tried to establish higher directional moves. It really struggled. Here's where we can kind of look at it on the open. We're recognizing this is not attracting buyers, and it's really not attracting sellers until about 9:30 this morning. Right? That's when the move started to happen. So we got to be cautious here. If you have to be in a trade, right? Not that you have to, but if this is the time and this is what you're looking for, once we start to recognize that we're hitting the wall, we're hitting some consolidation up here, accepting up above 4,800, we're struggling. That's where you can look at this and say, hey, I can go ahead. I'm going to look for rotation back to point of control, value high from yesterday. So if we're up here at 48.05, we're looking for a move down here, we can take a chance. We can say, look, I can take my short here, and I can risk 3 or 4 handles in the trade, right? That's $150, $200 a contract. In my opinion, that's a relatively cheap trade, looking for rotation back to the downside. That's your chance up here. Now, is that always going to work? No, it's not always going to be the easiest trade to hop in. That's a tough trade to get on. So what are we looking for? We get momentum to the downside. Now we have to look for the strength in a downside move. And here we go. We started to see this market pulling back around 10:30, 11 o'clock. And where does it pull right to? This is what I love. Using value areas from the prior day. We've accepted inside value. We have not made it to the low side of value yet. So I'm looking for this market to give me a chance. We take our short right here at value high from yesterday. There's my chance, and my opinion, the best trade of the day, taking the short, rotating it lower, and where am I looking to? I'm looking to just check extremes, and we got it really nicely here today. We moved through it by a tick, so that was the trade, in my opinion, going from high to low from yesterday's value. Now, you missed that move. As we approach value low, I'm going to probably struggle to say, hey, here's my chance, right? I'm going to struggle with that, especially as I saw a good bit of volume coming in on this last downside move. So if you're looking for it, as soon as you approach value low, you can say, hey, here's my chance. I'm not taking the short right away because I'm not shorting down here until the market accepts below value, but I can take this as a long opportunity and say, hey, I'm looking to see this market maintain range and rotate back inside. So you take the long down here and you rotate right back to the upside. All right, next, let's look at the NASDAQ. And this is when I kind of want to talk about divergence, right? So market starts off the open, selling off pretty darn quickly. We blew right through value from yesterday. There was no slowing down in this market. It blew right through value and continued to the downside. So the big thing for me is we're probably going to have a hard time catching this trade unless you're really good at watching order flow. That's something we kind of talked about today on Coach's Playbook too. Jack brought it up. It's not the easiest thing to kind of demonstrate. It's just a lot of time sitting here years and years staring at the dome and recognizing it. It's about the only way you're going to be able to take shorts here is utilizing that order flow and looking where is this market getting exhausted as it pulls back. Where are those pullbacks coming in? Where's the exhaustion? Boom, there's my chance. Let's get this thing to run. Now, here's what I want to talk about. after this move, we start to see our volume drying up. That's really, to me, the big thing here. I'm seeing volume start to dry up. And I also put on another moving average here for us today. It's the Hull Moving Average, or an HMA. A lot of people use these. This is on every one of my personal charts. I find Hull Moving Average extremely beneficial. It's a confirmation, right? So I'm looking here. I'm seeing volume starting to slim up. Basic principles of volume say, if volume is continuing or increasing, look for direction to continue. If you start to see volume start to diverge, or you start to see the volume starting to thin out, look for market to fall into a pattern or possibly rotate to the other direction. We start to see volume slim up, and all of a sudden, Hull Moving Average, one of the ways to utilize this is recognizing when the market is, so up here, the market is below the Hull Moving Average. The Hull Moving Average is staying above, so that's telling us market's looking to continue. As soon as the moving average goes from above to below, which we saw it here, right on that where volume starts to slim up, that's a confirmation that, hey, direction may be over. Look for rotation. And there we go. We got great rotation back to the upside. Great opportunity for long here. Hopefully some of you guys maybe even were able to take advantage of that. Next, let's go ahead and look at gold. Like we said, gold made the big move off the open and stalled out. So after John was kind of done talking with you guys today, it was almost over. That move was almost over. The only thing I can sit here and say, off the open, you've got a chance as this market pulls right down to off the open, pulls right down to point of control. Point of control sitting just a few cents above. Point of control from value low from yesterday. There's your chance. That's where you're looking for a long rotation. I'm not looking to see it run all the way up here. I don't have a lot telling me, hey, this is where it's going to get, other than our 200 period moving average here. I don't have a lot telling me it's going to get up there. So I'm really just looking for the long down here because it's a cheap trade. That's what we want to look for. We want to look for opportunity where we can be pretty cheap into a trade. And I'm just looking for it to rotate possibly to consolidation from the overnight session and value high from yesterday. That to me is the trade. Beyond that, if you're in that, hey, that's all gravy. Next, let's look at the euro. And like I said, euro, we had a big move off the open. Quick pop to value high from yesterday. Moves through it a little bit, but hey, it's volatile market. That'll happen. Moves through it just a little bit. But this is where we get to start to do the same thing. We get our pop. We see this market pop up, struggling, volume slips really quick, and rotates to the inside. Simple as that. Really good opportunity. Value high, rotation to value low. Another inside day. Those are great opportunities, right? That's where a lot of people are making their bread and butter. They're not the big payouts. They're not those $3,000 trades on every single trade you're taking. Jim, mine is 20. Mine's 20 there, Jim. They are not always going to be huge breakouts where you're getting $2,000 a contract. No. If you can find these days where the market is rotating inside, staying inside value, the market's telling you a great opportunity. Hey, I'm going to define your range here. And how often do we see markets when inside really utilizing those values to really take advantage of that? And lastly, let's go ahead and look at our 10-year note, and we'll get on out of here. Vince, good to see you as well. 10-year note, really, really quiet. Right? You had the big sell-off yesterday. Yields are up a little bit. This market didn't make it back to settlement, so we are still down here. Settlement in this market today is 129.14, 129.14, so we are still just shy of settlement price. It's really struggled to get up there. I don't have a lot to say on this one, to be honest with you. I really don't. All I could say about lunchtime, we pull right back to where we opened up. Here's a chance for long, move it to the upside. But again, tough trade in this market when it's not moving too much and really tight, especially after a big day like yesterday. All right, everybody, those are our markets here today. We do have some news coming out, which is one of the things I kind of find of interesting. Toyota is America's top-selling automaker for 2021, for the dethroning GM for the first time in 90 years. GM's been the number one top-selling vehicle or automaker for 90 straight years. It's unbelievable. And another big thing, part of the reason you saw stock sell off today, a record number, 4.5 million workers quit their jobs in November, and supply chain issues kind of continue to put the pressure on things. Seeing it everywhere. I'm big into snowmobiling, as a lot of you guys have known. I've talked about that in the past. Supply chain issues are a big deal in that industry. Everyone I know trying to get snowmobiles or trying to buy a new one. You're paying up extremely for the old ones, and new ones aren't coming in. So supply chain issues kind of continue to be a burden in so many sectors of the world right now. All right. Let's real quick kind of take a quick glance at some of the stocks we like to pay attention to. Bitcoin, $46,170 a coin there. Airbnb, $170.80. GameStop continues to sell off, $148.91. AMC, $25. Tesla yesterday opened up today, up above $1,200. We are down $50 here today, $149.59. Robinhood, another down day, $17.40. I think we're going to remove Robinhood from our stock watch. It's not paying out too many people. And Rivian, $101.39. Talked to a buddy of mine yesterday who's been waiting for years to get his Rivian, and he ordered it in the very, very beginning. Apparently, they're going to put out 1,200 cars this year, and he gets his approximately in 4 months, so that's kind of cool. All right, lastly, let's take a quick glance at what's going on in the economic calendar. Right, OPEC meeting was today. I haven't seen a ton into that. I'll be honest with you. I haven't really researched into it yet, so we'll continue to get some more information from that. Tomorrow, crude number, FOMC minutes in the afternoon. It is not the statements, just minutes, so you don't have to be flat for anything. But at 1 p.m. Central Time, make sure you're paying attention to that. And as always, first Friday of every month, unemployment numbers are coming out, so make sure you are aware of that one on Friday. All right, last but not least, the state and history. We'll get the heck on out of here. I got a couple for us. Thought I did. Yes, I have one. 1996, speaking of GM, right? 90 years dethroned by Toyota. 1996, GM announced its first ever electric car. Right? Everyone talks about Tesla, but GM, back in 1996, launched the EV1. If you haven't looked into it, if you've never seen that car, go check it out. They're kind of funky looking, way ahead of its time, but they're pretty darn cool, so check it out. So that's what I got for us here today. John will be back tomorrow morning, 7:45 a.m. Central Time, with the market forecast. Make sure you get in there and join them. And if you haven't signed up for John's Foundations class, make sure you do. It's going to be phenomenal information, and I'm really looking forward to seeing how it all works out. So make sure you guys get in there. Ton of information, ton of education. Really going to be a great class, and we all enjoy sitting and listening to John. All right, with that being said, I'm going to get on out of here. Y'all stay safe, wash your hands, trade smart, and trade well. Look forward to seeing you guys in the markets. Take care, everybody.